let's get a check now on the global economy. We see Spacex, they delivered a strong second quarter earning report, beating Wall Street's revenue expectations, posting a much smaller than expected loss. But despite impressive growth in Starlink and its AI business, investors focus on one thing: soaring capital spending. If you can put up the data for me now, we see the earnings from yesterday. That's the Q2 earnings for Spacex. We see that it's quite impressive, looking at the revenue the company made. All right, joining me now is Daniel Mobolaji. He's a senior research analyst at Bamboo. Joins me via Zoom. Great to have you on the show.
Thank you so much for having me, buddy. Good morning.
Good morning. So we see SpaceX, they delivered quite an impressive report there. You've seen their revenue beat, but when it comes to that AI spend, we see there's still an issue there. They're spending a lot on AI. How do you see the earnings?
Yes, they are spending a lot on AI. So the company reported second quarter earnings of around $8 billion. We're seeing double-digit growth across all their core segments, so space, connectivity, and also AI. But then what investors are really paying attention to is the capital expenditure. So the company is guiding towards $18 billion this year or so far for CapEx, 15 billion of that going directly towards AI. And then the market sentiment generally is around, okay, when do we begin to see the impact of this spending? The company did still report a loss of around $541 million. So it is still not a profitable company. And the profits that we're expecting are not coming anytime soon. So investors are really starting to ask the question that if you're spending $18 billion, 15 billion of that going towards AI, when are we going to see that reflect on the income statement?
All right, and we did see the share price, that's for after hours trading for SpaceX, that dropped about 8%, but it did close in the green. That's for regular trading hours. That's looking at the trading for SpaceX. Yes, it closed at $125.33, up about 10%. But after the investors read deeper into the earnings, post-market trading there, it did drop. What is that telling us, at this point?
Yeah, so it's two things. So first of all, yes, the stock did rally into the close last night, and that's because, it's SpaceX. There was an anticipation that earnings were going to be good. Elon Musk himself tweeted something to that effect. But then when the financial statements actually dropped and we're seeing the level of spending going towards AI, it's number one, it's concerning. And then with SpaceX, there's another thing you have to look out for, and that is the expiry of the lockup period. So typically when a company goes to IPO, insiders, employees, some early investors, their shares are locked up, so they're not allowed to sell immediately after the IPO to the new buyers. Now, SpaceX did something interesting. So instead of like a set period, let's say in November, everybody can sell their shares, they decided to do a staggered release. So by tomorrow, 20% of the total available supply of those shares is going to be unlocked, and the market is expecting some selling. For context, SpaceX has around 281 million shares available for trading. By tomorrow, another 900 million shares are going to be available for trading. And stock prices respond to the law of demand and supply. So if demand stays flat or falls, and then we have this supply of new shares unlocked coming into the market, there's an expectation that there's going to be some selling pressure. Now, whether those early investors and employees and insiders are actually going to sell is up for debate, but the market is expecting that. And because there's that expectation, the price is reflecting that there's anxiety over new shares coming onto the market and potentially being sold.
Right, it almost seems like short is the right trade at this point. But Starlink continues to be SpaceX's largest revenue engine. So it seems subscriber growth, that should be important. Enterprise adoption to sustain future earnings. Is that what you're seeing?
Yes, so that is what we're seeing. So SpaceX, when you break down the different components of their revenue, Starlink continues to provide more than half of the revenue and half of the profits, around $4.2 billion in the quarter. We also saw that subscribers grew almost double, in fact double, over the reporting period. So they now have around 12 million subscribers. And then the key part to pay attention to is actually enterprise adoption, because that's where they believe that the majority of future revenue is going to come in. The context being that the average revenue per user for Starlink is around $66. Last year, it was around 85. Now that number has come down because as SpaceX is trying to grow their subscribers, they are going into other markets and they have to lower their pricing to be competitive in those markets. Now, we don't see that same dynamic when it comes to the enterprise adoption. They did close a $6 billion contract with the US Space Force for a customized, satellite network. We're also seeing that they reported partnerships with American Airlines, with JetBlue, with Southwest, and they're also doing partnerships with T-Mobile as well. So they do believe that enterprise adoption is really important. And when you even break down the CapEx spend next to AI, space and Starlink takes the bulk of the money, and everything around how SpaceX is operating their business shows that they do believe that Starlink is going to be the continuous driver of revenue. So we see that a lot of spending is going towards there. Even when you think about the rockets as well, everyone understands that SpaceX is a company that launches rockets, but then they did, let's say, 38 launches last quarter. 28 of those launches were to put more satellites in orbit. So we do see that there's an understanding within the company that, look,
Right.
Starlink is continue being our growth engine, and we should, double down on that.
All right. Well, all eyes are on SpaceX after that monster IPO. Thank you so much, Daniel Mobolachi, Senior Research Analyst, Bamboo. Thank you for coming on today.
Thank you for having me.
All right, let's get a check on all the stories now. We see Honda, they've kicked off its new financial year on a strong note, reporting first quarter revenue and profit well ahead of market expectations while raising its full year earnings outlook. The Japanese automaker posted its first quarterly profit increase in 6 quarters, driven by strong motorcycle sales, improved performance in its automobile business, and a weaker yen. Despite ongoing challenges in China and a global shift in the electric vehicle market, Honda says it remains confident about the rest of the year as it focuses on profitability and a growing hybrid vehicle lineup. Then to Pharma now, Novo Nordisk, they raised their full year earnings outlook after delivering stronger than expected second quarter results, but that wasn't enough to reassure investors. Shares of the Danish drug maker fell sharply after sales of its blockbuster weight loss pill Wegovy narrowly missed expectations, while disappointing clinical trial results for its next generation obesity treatment raised fresh concerns about its competitive position against Eli Lilly. The results highlight the growing pressure in the fast-expanding global obesity drug market, where innovation and execution are becoming just as important as strong earnings. And we see Siemens Energy, they've delivered another strong quarter, beating analyst expectation on both profit and revenue as booming demand for AI data centers and power infrastructure that's fueled record sales. The German energy technology company reported a sharp rise in earnings, driven by strong orders for gas turbines. And that's what's hot in the global economy. It's back to Uni.